Hello and welcome to the High Five series. My name is Michael Long and I'm a member of the Kaplan CFP staff faculty. I want to welcome you to High Five and tell you I'm excited to work with you through this series. This will be a series of 7 sessions, and I hope you can get some insight and some ideas as far as how test questions are structured for the national exam. This series is a little bit different than most classes that you've attended in that the focus of these sessions is not so much the academic information and teaching. You've had a lot of that already. You'll have some more as you prep for your exam. But I want to try to help you with some perspective of testing applications within some of these topics, as well as how it's been tested in the past, and even some nuances about a particular topic that make it great for question writing for a national exam. So I'll have a little different feel. It's far more casual than most classes you'll attend, in that I'm just going to share my desktop and I'm going to work right out of the books that you have in your review package, books 1 through 6. I will bring those pages up and reference the items on the page that I think are of particular interest. So I hope you enjoy it. I hope you feel like you're getting some good insight. But if you have any questions as I roll through these sessions, please send them to me, michael.long@kaplan.com, or feel free to use the instructor link, Ask an Instructor service you could find on your dashboard online. If you use that link, just please put High Five in the topic area and it'll be routed directly to me. So whatever works for you there, but you may have some questions that you jot down as I move through the material, and you can fire those off later and I will respond just as fast as I'm possibly able. So what I'm really trying to do with High Five, I think, is depicted well in this unique bridge picture. What I'm trying to help build and provide for you is a bridge to move from academic knowledge about topics into the financial planning applications of a topic. One of the reasons that most of us felt that the National CFP exam was one of the most difficult exams we had ever taken was simply because most of us have not taken very many application-based exams in our careers. Certainly, securities exams, insurance exams are 100% academic recall. It is not application. You could even say that about a lot of the exams we took in college. A lot of that was academic recall. And then we arrive at the CFP exam, and for the most part, 100% of the questions on that exam are application-based. And what I mean by that is the question or the testing piece is wrapped in a financial scenario and a story. And we have to sort that out and apply what we know academically. CFP board doesn't give us a break on that. They expect us to really know our academics well. But then we must cross over into, can you apply those academics as a solution in a financial planning scenario? And that's where it's very different. So what I hope to do, most of you will be listening to these recordings at the beginning of your prep period for the exam. So I'm hoping to kind of influence your perspective or awareness, if nothing else, that you need to look deeper into these topics and think about how could that get tested, what are the scenarios that might be wrapped around this particular type of topic, and just make that present in your mind as you move through all your materials. But I can help with that too. And that's one of the things you might send to me is, hey, how would you look at this or that topic? I'm happy to try to help you grow with this particular perspective. Now, this bridge can be pretty steep to get from academic to application, again, because we don't have that much experience with it. So it can feel like a very steep climb in the beginning, might even be a little frustrating. But you'll start to absorb that thinking and you'll gain momentum, and then you can cross over and race down to the finish line for the national exam. So don't be surprised if you're a little uncomfortable with some of the application things in the beginning, but you absolutely can get there. All right, so this is a page right out of a booklet that CFP board publishes, and it's an exam candidate handbook that you can get through their website, cfp.net. But I copied this page simply because they just put it right out there in the booklet that this exam is about critical thinking and problem solving ability with less emphasis on mere factual recall or recognition. So that's where the stories come from. That's where the scenarios come from. So one of the things that we have to really center on as we look at CFP exam questions and case studies is what are they telling me needs to be accomplished here? What is the goal or the objective? So I try to be mindful of that with the simple acronym, get in the groove. And so we want to center on a goal that's being stated in the vignette or a particular risk that's been identified, an opportunity the client may have, which may or may not have hit their radar yet, but you just see in the material, the objective, perhaps with a tight timeline, some vulnerability, again, maybe on their radar, maybe not, but you recognize it and need to deal with it, and then constantly evaluating. And we will evaluate 4 answer choices on every question and find the one that best suits the objective or the goal or the cause that's being stated in the question stem or the case facts. So if you feel at some point the exam is very subjective, like, wow, there are 2 really good answers here, and I'm not sure which one to pick. There is only one right choice, and that's a good time for us to make certain we really have dug out the objective or goal or problem in the story, because that is what will lead us to the best choice among those offered. And sometimes the question is just what should the planner do next? And in those questions, conceivably, all 4 answer choices are technically accurate and true statements. But when we see what should they do next, there's only one of them that is the very next step. And I'll help you with that as well. What I'm going to do in these sessions is I'm going to do a session for each of the 6 review books. Today's is the General Principles of Financial Planning, but we'll work it all the way through with sessions out to the Estate Planning book. And then I'm going to record a special 7th session that is all about the standards of professional conduct. That technically in our materials is book 1 information, but it's so important to the exam I wanted to dedicate an entire session to looking at the standards of professional conduct. So let's get into this. If you were with me for a webinar I did called CFP Exam Education Done, Now What? You may have seen this wheel before. This is actually from CFP Board as well, and I like it. It kind of shows us variables that can go into question writing. So in the middle are always the principal knowledge topics. At the heart of every question you're going to answer on the national exam, it'll be one of those 72 topics that you've been studying and you will study even more diligently over the remaining weeks here. But that's at the center, and they break out the percentages of this pie. You can see the breakdown there, A through H, with A being professional conduct and regulation. That's the standards of professional conduct. And straight up, about 7% of the questions will pertain to that booklet that you're going to study. So that's what, like 11, 12 questions, quite a few. General principles of financial planning are a full 17% of the questions, which would be like, what, 20, 22, 23 questions. And education planning, 6%. That's another 10 or 11. If those 3 sections, and this is what we're going to get into today, those 3 sections make up 30% of the questions, so don't take it lightly. A lot of us, when we talk about general principles or fundamentals, it's easy to kind of dismiss and say, I know that stuff. I've been in the business a long time. I know all that stuff. And you probably do. But like most exams, it can get into some things that we don't work with that much, or some finer detail that we may not have memorized over the years. So this book 1 deserves as much or more attention as any of the other books that you're going to study, even though it'd be easy to toss aside and say, it's fundamentals. You want to always be maxing out your points. So today's session will be in book 1, and we'll get into general principles and education planning. And then, like I said, I'll do a special session on the third piece of book 1, and that's the professional conduct and regulation. So one variable in question writing are these topics, but there's 2 other variables that may be used in a particular question. Down the right-hand side of this page, you see financial planning, job, task, and domains. Well, that's CFP board fancy language for those are the steps in the financial planning process. So a question, while it may be centered on one of the 72 topics, the question may be testing what happens during any one of those financial planning steps. What kind of information needs to be gathered to come up with a solution for this particular goal or problem that's being described in the question. Again, a lot of that you look at and say, well, that's common sense. But when we get into the standards of professional conduct, you're going to see just a laundry list of things that CFP board says happens in each of those steps. And that's the stuff that might not just be stuck in our memory already, because these are pretty broad-based steps. The details are very numerous, and you can see where they could come up with a lot of different questions. But I'm going to have a whole session on that kind of thing for you. And then the third variable in question writing is down here at the bottom, called contextual variables. I look at that kind of as demographics. And so the question could be centered on a single parent or a young couple. It could be on a retiree. So those all become variables to use in the question writing. And then we can move along that line and have different clients of different net worth or income levels, or where they're at this stage of life. And then special circumstances can come into the picture as well. So if you think of this as a wheel and you can turn those dials, there are just unlimited scenarios you could build. And that's the hard part to predict for the exam. You absolutely will have studied the topics, and you're going to know a lot on exam day. What is impossible to predict for anybody is exactly the scenarios that you're going to see, because it's impossible for any education provider to think of all the same scenarios that the question writers for the exam will think of. So what I'm trying to help you with here is a process of taking apart the questions so that you won't panic on the exam when you see a scenario that you have not seen before. You've seen the topic, and you know about the steps in the process, and you know about needs at different types of demographic profiles, but the story may be a little different, and you just know you're going to unbundle that and apply what you know, and you'll be just fine with it. Take some practice, but you'll be just fine with it. So if you have any questions about this whole job task analysis thing, send them to me, and we'll work through them. Okay, moving on here. This is also from the candidate handbook. It's the list of 72 topics. Ever so often the board does what's called a job task analysis, and in their research with that, they visit with a lot of practicing CFPs as the type of things they're involved with in their practice and what things are changing, and that they try to keep the topic list aligned with what's happening really in the field. But I have found them to be pretty true to the number of questions in each of these areas. But as I mentioned, I don't want it to influence the amount of time per se that you put into an individual topic. I want you to study them all very diligently so you can max out your good stuff and hold the line on your weaker stuff. So I would just follow that 10-week study planner that Kaplan produces. And I'll say this about that study planner. Every cycle, we talk with scores and scores and scores of students who have passed the exam and some that did not. And one consistent commonality we see among those who pass is strict adherence to the 10-week study planner. Inevitably, with folks that haven't passed, there's something that got cut. There's something that wasn't utilized. So as sophisticated as we might want to make that analysis, it really boils down to, yep, pretty much those that followed the study planner to the letter passed the exam. So that's what will assure you getting through all of the topics and using the resources you have available at this level of preparation, using them all in the manner in which they were intended to build on one another, complement one another. All right, so I just copied a couple pages here. The ABC sections are the ones that we get into in the general principles of financial planning book. So there you can see different sections of professional conduct and regulation. I'm going to have a whole session about the testable elements in that category. The B section are the steps of the process and some topics that tend to show up very, very regularly on the exam. And then education planning has its own section. We'll get into that in this session as well. So it encompasses 21 different of the 72 topics that will be potentially testable on your exam. So this is a big, big, big book to pay attention to. All right, so we're working in book 1, and as I mentioned, I'm going to literally pull up the pages of your book 1 and highlight some things and put some notes in there that I hope can give you some additional perspective and exam tips. But remember, here's the disclaimer. Any topic on the list of 72 is fair game for the exam. Can't cover them all in one simple session, so there have been numerous topics selected for discussion today, but don't think that those are the only ones you're going to see on the exam. You will see far many more topics tested than the list that I'll run through today. And as I've mentioned a few times already, I'm going to give you a special session for the standards. There's no, these will be put up pretty close to one another, these different recordings, and you don't have to watch them in any particular order, but most folks I've found tend to go book 1 through 6 when they do this. So the first section I wanted to stop on in book 1, financial statements. These seem to always get tested on the national exam. So you want to know your way around a statement of financial position, and you want to know your way around a statement of cash flows, as that's where most of the financial statement questions come from. And then some of the areas of these statements are good for other types of questions as well. So just quickly understand that the statement of financial position is a snapshot on one day. It usually in CFP exam land is January 1st or December 31st. But understand that that's a snapshot on a given day, contrasted to what we'll see in a moment, where the statement of cash flows is for a period of time, usually the calendar year. The first thing I've starred here in this book is footnotes. Footnotes can be sneaky on the CFP exam. You want to always be sure to get into the footnotes, because CFP board likes to put keys to questions sometimes down in the footnotes. So make it a habit as you start to work through these books to get into the footnotes. And I like to always say, kind of with the mindset of, why would they be telling me this? Why would they have that footnote in there, and what kind of question could come from it? So, and you'll get a lot of practice with this. I mean, in book 1, there's a sample, and I'm going to show here, but in many of the cases in book 7, you will want to work completely through cover to cover, book 7, the case study book. Almost every one of those cases, if not all of them, have a statement of financial position, so you can get in that habit and practice that habit of taking apart the footnotes and anticipate what kind of questions you might do. You won't have to construct a statement of financial position, but you might be given snippets of information in a question stem, or certainly a whole statement in the case facts. But you need to know what goes on what statement, you know, assets and liabilities on the statement of financial position. And this is just a good sample. And in book 1, you can see the date up there, that snapshot date. I've also highlighted here the titling, and it'll always give you the key at the bottom for the board, you know, what do the titles mean, AM or joint. That's pretty intuitive, but that's really important, because this would be the source if you were asked to do, let's say a quick probate estate, or any number of estate planning questions could be sourced off of a statement like this, and you need to know who owns what. If this is more than one person that you're studying on a particular question or case study. And then you know the balancing effect of assets minus liabilities equal net worth. Net worth plus liabilities should be the same total as the assets. You might have to do some quick math with that. But these are important. And again, just kind of make note of where things appear on these statements and what kind of information you can go to source, particularly if you see a statement in a case study, because you should anticipate questions from many of the items that are listed on a statement like this. And as I mentioned a minute ago, I tend to look at footnotes through the lens of, okay, CFP board, why are you giving me that little nugget of information? And sometimes it can lead you to anticipate, oh, I bet there's going to be a question on this or that. So this is a short list just for example purposes, but they can be much longer on a case study. It might work for the exam. This is a nice practice question, and by the way, not only do you need to read the review books cover to cover, but you also want to always do all of the practice questions that are embedded throughout the book in these analyze and apply sections, but in the back of the book there are a collection of domain questions, questions that are centered on the steps in the financial planning process as opposed to some other approach. So this is a good one because this is one of the ways that this has been tested in the past. I speak a lot in these sessions about I believe this question would be in the national question pool because it has some great information to test, or also just it has been in the past. And this is one of those. This particular angle on testing reconciliation really as statements is one of the ways this has been tested in the past, and I believe would still be in the pool. And it's just, do you know how it impacts the statement based on what they've done? So always give these a shot and work through the rationale, the answer key as well. And if it doesn't connect for you, that's a great time to use the instructor link service or ask me a question. The second statement that usually is tested is the statement of cash flows. And here highlighted is the fact that this goes for over a period. January 1st to December 31st is usually how it's laid out. So you could see just a one-off question on the difference between the structure of those statements, the statement of financial position and the cash flow statement. So here we have income and expenses, right? You've seen these before as contrasted to assets and liabilities on the other statement. So for a period of time, this statement then can become the source for many different kinds of questions, creating a budget, establishing a proper amount of emergency fund, a whole host of financial ratios that are laid out in Book 1 could be sourced off of a statement of cash flows. Also, resources available, cash flow available to fund certain financial planning goals like education funding or retirement funding. And just as a quick example, one of the ratios that shows up a lot on the exam is the housing ratio. So we would want to pick up the PITI, right? Principal and interest of the mortgage, the property taxes is the T, and homeowners insurance is the I. PITI, we would use those three figures in calculating the housing ratio along with then the income at the top of this page. So there's good practice in your materials for that, but that's a ratio that it seems more often than not does show up, and there's some percentages I think I may have highlighted in these pages as well that you want to stay within on those kind of calculations. Now on this particular statement we had a self-employed individual, Nicholas, and sometimes we need to go grab that number, the self-employment tax number, to use, say, in a calculation for the maximum contribution to a retirement plan for a self-employed individual. because we would need to take out the deductible portion of the self-employment tax before we can apply the maximum contribution formula. So again, just an awareness here of what kind of things are showing up on these statements so that you can quickly go to that spot if you need it for a standalone question or for a case study, obviously. All right, here's the housing ratios, and this is a popular exam question as well. There's all kinds of ratios you see in the materials, but these are the two that seem to be most heavily tested. The housing cost ratio are the non-discretionary discretionary housing costs, and that would be your PITI, divided by monthly gross income. And we would be looking for that to be equal to or less than 28%. And the next one then, debt to income. Now here we're picking up not only the housing costs, but other monthly debt payments as well. And we divide that by the gross income, and we'd like for that number to be less than or equal to 36%. So that's something I would write down. I'm a big flashcard writer. I think it really helped me many years ago pass the exam. But those are the kind of details I'd put on a flashcard. And I don't mean retail flashcards that you buy. Those are fine too. They have a question on the front and an answer on the back. I'm talking about ones you write out yourself. I use 5x7 cards. A lot of my students in the past have told me they use spiral pads, one for each core topic, 1 through 6. I just think there's some power in taking the time to write some things out, some little notes. Well, 28% and 36% would definitely be notes I would make on a flashcard. I would study the debt section pretty well. That's kind of a renewed focus for the exam of, I mean, none of these topics are really hard, and you have personal experience with a lot of this stuff, but there has been some renewed emphasis in recent exam cycles to take a look at various debt scenarios and what you might recommend. Now, a lot of the application is pretty basic here, and I've boxed that out here on number 2, debt analysis. And you might have to go to financial statements to pick up some trends. I think this is a pretty good point to make here, that if you're given multiple year statements to look at and you see a trend of increasing credit card balances and more cash flow being used just to cover debt obligations, and that could be an area that could be recommended to review and make a plan for. And then also you'd probably recommend this anyway, common sense wise, you'd want to try to retire debt with the highest interest rate first. Now, interest rates are one of the things that can often show up in your footnotes as they list the liabilities of different debt and they put the rate down in the footnotes. Would be useful to apply in some question like this. What order would you do things? Common sense, but still tends to show up. Mortgages. I think you'll get something about a mortgage on the exam, maybe more than one question, but it could be just analyzing whether the client should do 15-year or 30-year. You also could get a mortgage calculation. So I've stuck a quick example to the right there of some calculator input. This is 10B2 input, but just a 30-year fixed mortgage at 3.5%, $100,000 being borrowed. I like to keep the payments per year at 1 and then work with the other, manipulate the other variables. It can be risky if you're flipping back and forth between 1 payment a year structure and 12 payment a year structure. Inevitably, we forget. If we change it to 12, we forget, and then 3 questions down, it's not matching at all, and the reason is because we're still on 12 payments per year. So I would prefer to leave it at 1, and for things like the end value here, 30 years would be 360. We multiply the years by 12, of course, and divide the interest rate by 12 to have a monthly factor. Then for this mortgage, you could solve for a payment of $449, and then without clearing, if you wanted to see the first 12 months of how much interest was paid, how much principal was paid, and what the remaining balance is, without clearing the 449, I could run 1, input 12, shift, amortization. And on the screen it would show 1-12, and then I could use the equal sign and toggle through these three pieces. In the first 12 months, the clients paid $1,900 off of the principal. They've paid about $3,500 in interest and still have a balance remaining of roughly $98,000. Now, the reason I'm putting this in here is just a quick refresher. You've looked at that before. But understand that for the exam, that period that you're evaluating could be any sequence of months. It could be 1 through 36 to represent the first 3 years of the mortgage. It could be a question where how much interest did they pay in the 5th year. So you can adjust what months you're putting in. So that's something, just to be mindful of, because you might just get a question where how much interest did they pay in that 5th year. Boom, you can do that so fast with these shortcut keys. Okay, also, there's just some things in questions that you might want to be a little alert for you. And one is working with adjustable rate mortgages, particularly if you see in the question that it doesn't have caps. That's a risky proposition, and we need to be sensitive to that if we're looking at, which one of these 4 different mortgage structures would we recommend. The arm without a cap is going to be pretty high risk, and we would want to then be looking for information in the question, anything that speaks to risk tolerance or how long they might intend to be in the home. Because without a cap, that rate could really take off and make it unaffordable. So just little clues that are being told in the question, that's that RTFQ. And then my lens is always, why would you tell me that? So if I'm starting to see some detail, then that helps me sort out the answer choices. And essentially for lists like this, and you have a lot of them in CFP land, list of mortgages here, but you've got lists of trusts in the estate category. You have lists of qualified plans in retirement planning. I think it's a good exercise as you study is to start breaking down these lists into features and benefits, because that's what gets spelled out for us, are the features of a particular product or strategy. And then what we're trying to do is match the benefit of a particular feature to the client's objective, goal, or problem that's being spelled out in the question or the case. So you just start to react to little bits of information. The different nuances between these will not go real deep, but you want to have a big picture application understanding of these different forms. So with FHA, one of the attractions to the FHA is a very low initial down payment, can be as little as 3.5% down. In this one, there are 2 different types of mortgage insurance that are required. You won't be tested on how those types work, but it's in there. It has to have mortgage insurance. Contrast that to the VA. The VA stands out because that for a armed services person, that could be no down payment and no mortgage insurance required. So my triggers for looking through this would be particularly if I saw any mention of after serving 20 years in the Marines, and it goes on, well, that's a flag for me saying, maybe I can entertain the VA loan here. So just try to pick out the the nuances here. Interest only can be a much lower payment, but very risky because no principal is ever being paid down. When the market, housing market's booming, you saw a lot of these because the equity was growing just from the appreciation in the property. But then when that stops is when they really become risky. So again, you're just looking for what things are they telling me in the stem that would help me sort out 1 or 2 major benefits, features and benefits of these different kinds of loans. The reverse one often shows up as just a possible source of retirement income. So this is for folks who are 62 or older. A question about a reverse mortgage is not going to go real deep into the details, but it truly is in reverse, where the payments are coming to the client from the equity of the house, but that does become loan that would need to be repaid ultimately if the homeowner dies or no longer resides there. But just know the big picture here. We're talking a senior citizen, 62 or older. They do retain the title. It is debt against the property, but it typically, the story is that they would like to supplement their retirement income, or perhaps it could go one layer deep, and they're going to use this stream to pay for long-term care insurance, let's say. But you just pay attention to the details on which one of these to recommend for them. Home equity loans, I believe there to be at least one question in the pool about home equity loans. One of the things I like as a testing point is the fact that with these, the debt can be used for any purpose without affecting its deductibility. That's a nice standalone question. Again, it could be in the scenario where they're telling you a lot more things about the property and the numbers, but in there is something about home equity. I like the testing on the $100,000 limit. That's the maximum amount of home equity debt for which interest may be deducted. I think that one tends to show up at the $100,000, and it doesn't get into that next point. Fair market value of the primary residence reduced by current acquisition. I think if you see this one, you'll see it related to the 100,000. See how you can start stacking up questions though when you think about, wow, where are they going to get 17% of the questions, 23 or 4 questions from this book? Well, it's pretty easy. All right, the next section I stopped on was section 5. On the function, purpose, regulation of financial institutions. And the thing I wanted to talk about here was FDIC. That almost always shows up on the exam. So I think you'll see it. And then quickly I highlighted, and you all know this, but the securities, mutual funds, and other investments like that are not covered by FDIC. So these questions almost 100% of the time are just about banks. All right, now here's the big thing. To keep this simple, deposits in different financial institutions are insured separately, even if it's the same type of investment. Let's just use CDs. But this next piece is where a test question can come from. If an institution has more than one branch, then they're all lumped together in applying the FDIC limits. So the question stem may go on and on about they've got money here and there and here and there, and identify some of them as being branches as of one of the others, but a different location name, let's say. Just remember, for the branches and the main branch are all lumped together. That's a good exam question. And here's the whole essence of this. The biggest challenge in doing your FDIC problems is to get your ownership groups separate, because the limit, the $250,000 limit, applies per ownership category. So all the single, fee simple, sole ownership assets are lumped together in that institution, but so are the joint. And then there's a separate one for retirement. So that's the only thing you really need to do for these kind of questions is I would just quickly sketch out the 2 or 3 or 4 different ownership categories and write the numbers in, and there you have it. Because this question is always how much is insured in total, or read the full question because it might be how much is not insured. So don't always assume it's just about how much insurance is in place here. Easy thing to do if you just remember it's by category at that same institution. So they can have multiple $250,000 limits in play. And some good examples in here for you to work through in the book in this area. I really like this one this example, and this could be like an item set, and it might have some other information that becomes a question in the item set. But just as far as applying the rules, this is great, and this is very representative of how it has often been tested on the exam. So give that one a look and see if that makes sense to you. But this one, again, I think you'll see it, and I think it can be a gimme if you just understand those couple of basic points. Okay, big section today, education planning. And this is one of the more important topics on the job task analysis list. And you need to know your way around multiple things for education planning oriented questions. Starting with needs calculations, you almost always have to do at least one of those on the exam. It's pretty easy if it's just one child. It's a little more challenging if it's more than one child, in which case I'll mention this morning the uneven cash flows method. I'll talk about that in a minute, but it really saves you time if you know that method if there's more than one child in the story. Or you could have questions about education on what funding vehicle would you propose based on the data that's being given to you. You might also have to prioritize distribution from different vehicles to fund a particular need. You know, in what order would you rank the following as far as accessing first to last? There have been questions like that. Moving along the contextual variable line, if you remember the wheel, at one end might be that young parent, and it's all about calculations. It's all about how much are they going to need. But if a grandparent gets into the picture with education planning, we might be looking more at gifting. We might be looking more at a grandparent paying the institution directly, so it's not even a taxable gift. So the focus and application of a topic can change based on where they're at along the contextual variable line. Tax credits is another one that you almost always will have on the exam, AOTC or lifetime learning credit. And then financial aid, not going real deep, but just knowing the basics and the differences between some of the financial aid. So you can see there how easy it would be from that list of applications to come up with 10 or 11 different questions pertaining to education planning and funding. And I think your best bet for education savings calculations, it may have been a while since you've done these. Understanding your financial calculator book is the best source to go in and revisit the steps in the various approaches you could take, but also have practice questions. For any of the calculator items, that book is great because it gives you keystroke by keystroke instruction for all these common calculations for the exam. And then there's a couple hundred practice questions in the back of that book if you need to refresh your memory or strengthen it on these different calculator pieces. And I mentioned a minute ago this uneven cash flows method. It's a great one to know. So you might want to try to put some time into that and get comfortable with it in case you run into an education funding question where there's more than one child and they're different ages. If you have a 4-year-old and a 7-year-old, uneven cash flows can save you a ton of time by using that method. And that's another good one to ask questions on if you get in there and it's not quite connecting with you. You'll also use uneven cash flows to do like internal rate of return calculation or a net present value calculation. It is the same type of entries. So you might be able to get more than one question right by knowing uneven cash flows. Tax credits almost always are tested. So you want to know the basics of these tax credits. Now the thresholds are now provided. The phase-out thresholds are now provided in the tax tables for the exam. And this is one of the areas where they now provide less information than they used to. They used to also tell you how it worked. Like you would have information, hey, it's $2,500 per student for the AOTC and the breakdown of how that works. They don't do that anymore. It's just the threshold. So you're going to need to know the application. 100% of the first 2,000 of qualified education expenses plus 25% of the next 2,000. You're just going to have to know that. And they max out that credit at $2,500 at $4,000 of qualifying expenses. Sometimes the way this is going to get tested, you'll be given all the information and then you have to pick which item gives them the biggest tax benefit. A lot of the time the AOTC wins because it's $2,500 tax credit, dollar for dollar reduction of the tax bill on only $4,000 of expenses. So quite often that's your winner. But pay attention, to the details up in the stem. For instance, like the AOTC, the student has to be enrolled no less than half time. So again, if you see in the question stem some mention of how long the student has been a student or how much time they're putting into, that ought to be a little alert that are they going to qualify for AOTC, or does what they're telling me take them below that qualification? I don't think you'll get into something about part of the AOTC being refundable. It's good to know, but I think it's more likely just which tax credit would you tell the client to take or how much of a tax credit it would be. Lifetime learning is a little easier. It's a little more flexible, isn't it? Because this does not have to be in a degree program, does not have to be even half-time, unlike the AOTC. Now, one of the downsides of lifetime learning is it's just $2,000 per family, not per student like the AOTC could be. And it's applied at a factor of 20% of eligible expenses. So to get the full $2,000, they have to have $10,000 of eligible expenses. Some of the questions in the pool will have you recommend one for, like AOTC for each student, and then maybe there's a parent still in school on a part-time basis. Well, lifetime learning could come in there as well. So you're just kind of dividing it up. Also, another key testing point, I think, are here under the requirements. This can be taken for an unlimited number of years, whereas you read about AOTC and it's just for 4 post-secondary. That's a nice benefit for lifetime learning. Again, I mentioned it doesn't have to be a professional degree program. It does not require enrollment in a degree program, I should say. All right, so there's your thresholds. Again, those are applied. So make sure you spend some time with this. Here's the box that I think summarizes it well for you as far as you can't ever duplicate. Maybe that's the easiest way to remember it. You can't double dip. You can't claim more than one tax benefit for the same expense. Haven't heard a lot about any employer educational assistance program questions, but your information's there. Plus loans. Now, so much of the education benefits and aid that's available is needs-based. But if you have a scenario where they're not going to qualify for the needs-based, don't forget about the plus loan, because this one is not needs-based. They have to have decent credit to qualify for the plus loan, but sometimes that's the loan remaining program that could be used if they just, if their income's too high, income and assets are too high. There's no limit on that. Does get phased out though at these upper income levels, but again, they have this, I'm in the wrong area here. I'm sorry, I'm thinking ahead of the loan interest. This one was the deduction for student loan interest. I'm thinking too fast. I'm sorry about that. No wonder it started to not make sense to me as I scrolled here. I highlighted this though because this is a great benefit. If you have a student or a parent, I saw the word plus loan and went right into it here. For student loan interest on these various kinds of loans that they can get, that's a 4 AGI deduction, above the line deduction. And that's a pretty good benefit if you think about it. And that's the part, this availability of deductible student loan interest, that's the part that gets phased out. The plus loan doesn't have the phase out, so your higher income and net worth people can still get a plus loan. But this phase out applies to deductibility of student loan interest. Sorry about that, I confused myself. 529 plans. This is a good area to spend some time with because it, much like AOTC is the winner between AOTC and lifetime learning, 529 plans often come out on top as far as what you're going to pick as the correct answer. Just because they're very flexible and you can put a ton of money into them to fund down the road, whether that's fairly immediate or many years down the road. So expect, I would say, multiple questions about 529 plans. Most of them are about this college savings plan type rather than prepaid tuition. So just remember there's two types and maybe the names, but most of the application will probably be something to do with the college savings plan type of program. Starting with, you sometimes have questions where they're wanting to put other property in there, and you can't. It's got to be cash. You can't just put, a piece of real estate or something in there, or some other kind of property. Now, there is some direction of investments, but it's not individually selected stocks and bonds. These are typically funds, and you can have different allocations based on the age of the student, but most of them work the same way in that they give you a small array of choices to pick from. Now, I made a note here, we get into kind of contextual variable things and what might be important to the client here. So we want to be aware of these different objectives to help sort out which way to go, with the story. So one thing from a contextual variable standpoint is if grandparents are involved, and one of the motivations for them might be that they want to get the assets out of the estate. So that's a plus, for the 529. You can change the beneficiary. So I would be watching in the question stem, how do they feel about this child ultimately indeed going on to college, or sometimes the conversation goes to qualifying for scholarship or athletic scholarship or an academic scholarship. Well, what can you do then? Are you stuck? No, they can change the beneficiary. And then we get into the big dollars that can be put into the 529. It will vary plan to plan, which is why it won't be specifically tested in that manner. But you can see 100 to 250,000 perhaps can be placed in a plan, far more than what can be put into a lot of other things, such as Coverdale, let's say. And another key point is J, their contributions are not phased out even at higher AGI levels. So, we may have a story that it's a higher income family. They're not going to qualify for most any other financial aid, but maybe they could look at 529, or if they wanted a plus loan, they could qualify for that. So just kind of know this big picture main benefits. As far as the gifting, this has shown up a lot, and it has to do with the 5-year acceleration. So with the split gift, the exclusion is 14,000. So at 5 years of that, it's 70,000. So if we have a couple that is splitting this gift, we can move up to $140,000 in one shot that could be put into the plan. Now there's some rules that, if the person dies within that 5-year period, some of that comes back a bit, but the testing will just be what's the number? What's the number? And just know that you've got 5 times 14,000 times 2 in a split gift. We'll talk a little bit more about this kind of thing in the session from the income tax planning book, and we'll get into that, the idea of paying the institution directly. And this again could be parent, but quite often the question is about a grandparent. And so we're looking at, well, should we load up a 529, or should we have grandpa or grandma pay the institution directly, because then it's not even a taxable gift. But there will be enough information in the question stem to lead you to the 529 or to the direct transfer. Something else I wanted to mention here. As far as that annual exclusion, it is a gift of present interest, so it does qualify for that. Change beneficiary at any time. That can be important, and because you may have a story where the child either doesn't need it or isn't going to go, and then the 0.7c is a pretty good testable point there, that a change in the beneficiary is not a taxable distribution if that new beneficiary is a member of the previous beneficiary's family. So just know that there's that out. I would be surprised if an exam question will get into the gift tax consequences of a change in the beneficiary. Again, this is great information for this knowledge foundation, but I think it's these other pieces that are more likely to be tested. If money is distributed that was not used to pay qualified education expenses, then we get into tax and possible penalty. And you recognize two of those penalty exceptions you recognize from being in an IRA as well, right? So we have after death or disability of a beneficiary. But I like the third one too. That's enough of a little nuanced wrinkle that you could see something like this, where the money's being distributed because that beneficiary is receiving a scholarship or allowance or something, so they don't really need to use the 529. So we can get out of the penalty there. Coverdale, there's a lot of information in here about Coverdale for a fairly minor piece. And testing on a Coverdale would not go super deep. One of the things I like, though, is the fact that if you look at 2C here, the red box area, this one can go down to K-12. So the scenario might be just that there's a child going to a private school and they're in the 3rd grade. What tax benefits might be possible? Well, Coverdale is still in play, whereas AOTC certainly would not be, would it? So that's one of the things I would always be looking for in this story, is where are they at? Are they in a private elementary? Are they in high school? Because this could be the ticket for that question. Phase outs again are provided for that one. Here's another one that's been in the pool before, just testing the limit. It's not much, is it? Maximum contribution of $2,000 per beneficiary, but that's not per contributor, and that's where the exam question is. The story would talk about multiple folks that want to do this, but it's $2,000 per student, not per contributor. But that's been a standalone question on the exam, so I would say it's still in the pool. And then another nuance to the Coverdale is it's got to be distributed when the beneficiary finally reaches age 30, whereas some other things we'll look at along the way would not have to be distributed at 30, but the Coverdale would, so I like that as a standalone question. I like the red box area here, number 7, in coordinating, as I was mentioning, between AOTC and lifetime learning. We wouldn't be able to claim both of those for the same student, but a combination within a family is possible. And as I mentioned earlier, we just can't double dip. You can't claim multiple tax benefits on the same qualified expense. There has to be enough to cover it all if we're going to use more than one. Now, with financial aid, they're not going to make you a master of the FAFSA form, let's say, for the CFP exam. I would know some big picture stuff about what goes into FAFSA and the simple fact that the student's assets and earnings are weighted much more heavily than the parents. But then get a feel for just some of these more common types of aid that are available, starting with just the difference between the grants and the student loans. The grant is a gift and it is not paid back, whereas of course all of the student loans are eventually going to have to be paid back. That's been a standalone question before, just the difference between a grant and a loan. But then the next page has a deeper lineup of things, and you want to know the basics about these. Here's that plus loan information on E that I got into prematurely. And again, as I mentioned, that's the one thing that is not needs-based. And then I would know too, down here in F and G, the difference between subsidized loans and unsubsidized, and usually that one's going down the trail of while the student's still in school or even through the deferral period, the government might be subsidizing the interest, and unsubsidized it does not. So you just watch for the story. What are they describing and how it works, or based on the facts you're given, big picture, which one of these do you feel fits? But it's not going to drill down 10 layers deep on this kind of stuff either. Now, I did hear, I don't have deep confirmation of this, but it got my attention. A student was certain that they had a question that was tied into the Healthcare and Education Reconciliation Act of 2010. And it was the simple point that for new loans starting after 2014, can base loan repayments on limited to 10% of discretionary income. That's something I would just write down. I haven't heard that from a lot of folks yet, though, so it's hard for me to confirm. Sometimes students will recall a singular question, but they'll describe it to me, and it actually was something from our material, because it all kind of runs together at some point. But we'll see if there's mention of that particular point of limiting it to 10% of discretionary income. But since I heard it once, I want to pass it on to you, and you can write that down in that particular piece. You also may have to prioritize distributions from other types of vehicles, retirement or investment vehicles, based on the story. And one of the ways they test that is, in which order would you access the following accounts to pay a needed, I don't know if they give an amount or just in general, but you'd have to, in one question, process, okay, what are our ages? What's basis? Are we still in a penalty situation if we take money out of this account or that account? So that's some quick thinking. These kind of questions will have, in the A, B, C, D answer choices, they're a different financial funding vehicle. So you need to really focus on how money comes out of these things to process that question. But that question I've heard of almost every exam cycle for a few years now. So be ready for that. Make sure you review distributions from these other kinds of accounts that weren't specifically set up for education. You could also see a question, I mean, these aren't used that much anymore, the UGMA, and usually that all became UTMAs. But I would just remember here that we could trigger some kiddie tax, and you would want to evaluate that, among your answer choices and your rules there as far as the age. But if a question about UTMA is still out there, it's probably just a singular question, and my bet would be it would be kiddie tax related. Okay, then you've got a nice summary sheet. I took you through some of the individual sections, but this is a great page. You know, this is a good one just to have copied and among your materials while you're into just doing practice questions and things. So this is a nice quick look sheet. What other students have done with this is they will take a piece of paper and have it cover all of the details. Only exposed are the left-hand side and the top of the page, and they try to write in as many of these things as they can. And they will repeat that exercise so by memory they know more and more of these differences between these different kind of accounts. But I like this summary, and you can start to pick up and highlight some of the nuances between these. I mean, just as an example, the AOTC and the lifetime learning credit, that second line, we've got $2,500 per student versus $2,000 per family. What education qualifies? First 4 years of undergraduate for the AOTC, no such restriction for the lifetime learning, and so forth, because that helps you center on why would a client use this product or this strategy versus another. And by studying these kind of spreadsheets, you can start to internalize a lot of those nuances and make your pick. Most of us felt for the CFP exam that it was pretty easy. If you've studied at all, it was pretty easy to go from 4 answer choices down to 2 answer choices. But then it can get really difficult to narrow it from 2 to 1. The more of these nuances on things like you see on this spreadsheet, the more of those nuances you can start to remember, the easier it becomes to go from 2 answer choices to 1. And this exists, again, in other, really just about every book has something like this on some topic that can be summarized, and then you can study it and highlight the nuances between all these different ideas. And I mentioned the thresholds are now being provided. It's a really good analyze and apply question. This is in book 1. But here again, we've got a mix of possible funding vehicles. I love this question. It's pretty long question stem, but this is very representative of what you might have to do for the national exam. So give that one a look and see if that connects for you. And certainly with all of these different kind of questions, now that you're beyond the basic education courses that you had to take, it's very important when you do practice questions at this next level of prep, study the answer keys as well. We're all wired to want to move on and set up the next quiz or just get into something else. But we need to take the time and make sure in reading the answer choice, the rationale, that it connects with us. Do I understand why that correct answer was the best choice from the ones they gave me? It's not something else that we could think up that would be an even better answer choice. That's not on the exam. They've given you 4. Which one is the best? Why? And that's where you want to study these. And for the more difficult questions you encounter, I think it's good to get back in the books. Let's say you're out in the Q bank or you're working a case study out of book 7. If something really throws you, I would mark that and either immediately or at some point circle back around and find that section in the book to make sure that connects for you. And speaking of that connection as well, throughout review books 1 to 6, there are some wonderful application examples embedded throughout the sections. Make sure you take the time to study that example because those examples are 100% application, which is what your questions are going to be. A lot of students will have a tendency to rush through, not really stop on the examples. I've actually had now, because I've been talking about it for a couple of years now, I've had some students that have told me one of the exercises they did was they went through those review books and stopped on every example box and made a copy of the page, three-hole punched it, and had an entire binder of nothing but application examples that they used in the last few weeks of studying, where they could touch a whole bunch of topics on an application basis in a very efficient manner just by flipping the pages of that binder. I thought that was a pretty cool idea, but you definitely want to study them as you come to them. All right, new subject, new section. I think you'll have at least one question on monetary and fiscal policy, and you want to be able to separate these out because oftentimes they just describe what's going on, and the question is this monetary policy or is it fiscal policy? So the big picture cut on this is that the monetary policy, that's the Fed. That's the Federal Reserve that is either trying to expand the money supply or contract the money supply, and they do it through interest rates. So if they're trying to expand, they might lower the interest rates, so banks do more lending. There's just more money out there. If they're trying to pull it back, they might raise the rate that would serve to constrict the money that's available. So that's really the first cut. But always you're just asking yourself, okay, is the action that they're describing, will it have the effect of increasing the money supply or decreasing the money supply? And that will lead you to the correct answer. So make sure you give this section a look, and then you want to contrast that to fiscal policy. And fiscal policy, whereas the monetary policy is influenced by the Fed, fiscal is by Congress. And the way I've always remembered that for the exam is the word fiscal has a C in it. So the C for me became Congress. That's been a pool question in the past, is which one does Congress control? And that would be fiscal policy. So in a description, if you see mention of stimulus programs, that's going to be an indication typically of fiscal policy. But certainly the biggest clue is that they mention Congress in the question stem. So it's just basically with this one, another big picture cut is the government spending money? Are they investing in the economy? There once was a question in the pool about the government purchasing heavy equipment for use in infrastructure repairs, bridges and roads and things. Well, that's fiscal policy, but that also identifies most of the stimulus programs that you would see described. So pretty easy question, but it's just one that tends to show up a lot, and it's pretty simply tested, and just to separate out what kind of action is being taken and who is creating that action. Is it the Fed or is it Congress? All right, I think you'll have at least one question on bankruptcy, but again, pretty big picture. So just know the three forms. What's the difference between Chapter 7, Chapter 11, Chapter 13? That's a good exam question. It's not going to go deep into the law, but what do these different numbers mean? Then I don't know that you would have a specific dollar amount, but this protection, creditor protection in the event of bankruptcy for Roth and traditional IRAs, that's changed. I think it's every 3 or 4, maybe 4 years. 2016, it was up to 1.28 million. Every 3 years, there it is. That's that A point. So the next change is 2019. And then the other point here, if they would lump in a SEP or a simple or a conduit IRA rollover, taking a distribution from a qualified retirement plan, those three items have unlimited protection, like the qualified plans do under ERISA. So somewhere in there, in that little lineup of Roth and traditional and the amount and these SEP, simple, and rollover accounts, there's a good exam question coming from there as well. All right. Here's another one I want you to remember that is in the pool. It's probably more probable you would just have to know the difference between 7, 11, and 13. But regarding Chapter 7 bankruptcy, what are some things that cannot be discharged in a Chapter 7 bankruptcy? And I think the most likely candidate here that might show up would be alimony and child support. That's not going to get discharged. So that has been a good pool question as well. So a couple of different sources to close out this this session on book 1. As I mentioned, we go pretty quickly through all that and just try to point out these highlights and such. But if anything raised a question for you in this session, please send it to me or use your instructor link, and we'll get back to you just as soon as we possibly can. When you send something in, try to give us an idea of what your thought process was. A lot of the questions that come in are related to practice questions. So don't just say, I picked B, why was I wrong? Don't do that. Explain why you picked what you picked. And the way that if we need deeper help with this, we can actually route questions to the primary author and content specialist. A lot of them I can just handle straight up. But if it's getting deeper and we need the specialists involved, I'll always make sure they are involved if that's the help that you need for a particular point. All right, so I hope it gave you some ideas and insights in this session of High Five. Again, there'll be additional sessions posted, and you can watch them on demand as you have time. So study on. You're at a great phase now where you've gotten out of the, you've graduated from the required classes, and now you're into the exam prep phase. And I've said over and over the years that what I've seen for a lot of students, they either pass or fail the exam with how they choose to use their time from the period they have finished their required courses until they get back with a live review instructor. So you most likely are in that middle section of preparation that's so critical to your success. So make a plan, work it hard, stay close to that 10-week study plan, and expect good results. Let us know how we can help you next, and look forward to working with you some more here in High Five. Take care. Bye.